Hi everybody. When Modi ji became the Prime Minister of India, one of the most important agendas and promises that he had was to eradicate the black money in India. But the question is, 10 years, 1 demonetisation, 2 Modi terms and several GST reforms later, have we really succeeded in eradicating black money?
जिस दिन भारतीय जनता पार्टी को मौका मिलेगा, एक-एक पाई हिंदुस्तान की वापस लाई जाएगी।
8 नवंबर 2016 की रात्रि को 12 बजे से वर्तमान में जारी 500 रुपए और 1000 रुपए के करेंसी नोट लीगल टेंडर नहीं रहते। ब्लैक मनी के खिलाफ ऐसा कानून बना है कि अब हिंदुस्तान से कोई विदेश में रुपये भेजने की हिम्मत नहीं कर सकता है। 3 साल के भीतर करीब 1.25 लाख करोड़ रुपयों से भी ज्यादा काला धन को हमने खोल दिया है।
According to Ahmedabad Customs, the amount of gold smuggled seized at the airport has seen a 65% rise in FY24, wherein 241.1 kg of gold, as in 180 crore rupees worth of gold was seized. And this 5-year trend shows that the amount of gold smuggled from the Sardar patel airport is increasing at an alarming rate. And this is an indicative of the figures all across the country. Secondly, RBI says that there was a 102% increase in the number of fake 500 rupee notes in the Indian economy. So, counterfeit currency is still a growing problem even after demonetization. And I was shocked to know that there is even a black stock market system in India. And this system is so big that while the average daily trading amount in NSE is about 1.02 lakh crore rupees, in this black stock market, the average daily trading amount is estimated to be 0.7 lakh crore rupees, which means 70,000 crore rupees worth of black transactions are happening every single day, just like the National Stock Exchange. So the question is, have we really succeeded in eradicating the black economy? Well, you know what? You would be shocked to know that the root cause of everything from smuggling to black market to even the underworld and crime, everything is linked to just one variable in the Indian economy, and that is tax.
Tax.
Government has reduced and rationalized tax rates.
Indian corporate tax becomes very attractive and should be able to attract higher investments.
ट्रांसपेरेंट टैक्सेशन, ऑनरिंग द ऑनेस्ट, 21वीं सदी के टैक्स सिस्टम की इस नई व्यवस्था का आज लोकार्पण किया गया है।
So, with the budget announcement coming, we laid down a very interesting piece of research which tells us how are taxes directly used as an instrument of wealth by the underworld and smugglers of India. How does the black market and black stock market get created because of the tax system? If we have zero tax in India, what could happen to our economy? And most importantly, since black money is a virus to our economy, what is the most practical way to eradicate black money in India? Chalo, let's start from the basics. The first thing we need to understand is how high taxes result in black economy, smuggling, and even promote the growth of the underworld. Let's understand this using an example. Did you know back in the 1970s, which is during the Indira Gandhi era, this is what our tax structure looked like. It started from a moderate 10% tax rate and went all the way up to 93.5%. Yes, tax rate in India back then stood at 93.5% beyond a certain slab. So if you made anything about 2 lakh rupees, you had to pay 93.5% tax. Sounds terrible, right? Well, for some reason, even then the Indira Gandhi government thought that by taxing the rich so much, they could simply make more money from the rich and use that money from the rich for the welfare schemes of the poor. And eventually, they thought they could empower the poor with this tax money collected from the rich. This was the ideal result expected. But do you know what happened because of this tax structure? This tax structure indirectly contributed to the massive rise of black money, which eventually became an instrument of wealth for the underworld and people like Daud Ibrahim and Haji Mastan.
Daud runs a massive empire in the state of Maharashtra.
एक्सेप्शन नहीं करते वो लोग, बिल्डर लोग को ये बोलते हैं हमारा पैसा इन्वेस्ट करो और हमको कमा के दो।
The question is, what is the connection between the tax structure and the underworld, and how can tax structure empower people like Daud Ibrahim? Well, let's understand this using a simple hypothetical example between Daud Ibrahim and Jamna Das. Back in the 1970s, let's say Jamna Das was a rich businessman who wanted to sell his apartment in South Bombay at a market value of 5 lakh rupees. But since the tax rate about 2 lakh rupees was taxed at 93.5%, Jamna Das wanted to find a way to avoid this tax burden. Similarly, Daud Ibrahim had made 50 lakh rupees through his illegal business and he wanted to park his money somewhere. This is when both Jamna Das and Daud Ibrahim met, and here's how they evaded taxes using a simple method. Both of them came to an agreement such that Jamna Das would underreport the sale value of the apartment to 1 lakh rupees and Daud would only pay 1 lakh rupees officially and pay an additional 4 lakh rupees in cash directly to Seth Jamna Das. This way, Jamna Das avoids paying a hefty income tax on the actual sale value of 5 lakh rupees and only pays taxes on 1 lakh rupees. So very easily, he avoided the 93.5% tax bracket. Secondly, Daud has successfully converted his illegal income into a legitimate asset, which will further appreciate to a staggering value and give him both wealth and power. Cherry on the cake, Daud only had to pay stamp duty on 1 lakh rupees instead of 5 lakh rupees. But lastly, while Jamna Das and Daud both benefited from this transaction, who was the actual loser over here? The loser over here was the government of India, because the government could not collect taxes from Jamna Das even though he was rich. Number 2, the government could not collect stamp duty even though the property was sold at 5 lakh rupees. And most importantly, the government of India had given the superpower of wealth multiplication to the underworld, by which they could not just easily legitimize their money but also grow their real estate empire all across India, eventually making them more and more powerful. And this is exactly what is happening right now, but right now it is happening in the Indian stock market. And here's where something called dabba trading comes in, whereby 70,000 crores worth of transactions are happening every single day, making it one of the biggest black markets in the world.
जिस तरह से हमारे मार्केट्स में जो है ट्रेडिंग होती है, उसी तरह से जो है यहाँ पर एक फेक डमी मार्केट चलाया जाता है.
Dabba or box trading refers to an illegal practice of trading that takes place outside the purview of stock exchanges. It's like gambling.
मुंबई के कांदिवली से डमी शेयर मार्केट चल रहा था.
So growing black money is one of the repercussions of this.
So the question over here is, how does the system work and how are we not able to do anything about it? Let's say Apurva is a successful trader who trades in futures and options with a capital of 10 lakh rupees and rotates his capital multiple times in such a way that his daily turnover reaches 1 crore rupees per day. So how does this happen? He would invest 10 lakh rupees, make a profit of 2 lakh rupees and then again deploy 12 lakh rupees into the market. So this way, through multiple rotations, he ends up achieving a turnover of 1 crore rupees. And every time he places a trade, he has to pay a host of taxes, brokerage and fees to different entities in the system. So if you look at this table, there is brokerage fees of 20 rupees per executed order, a security transaction fees, transaction charges to the NSE, then there is GST, SEBI charges and then stamp charges. And this amount has to be paid regardless of whether he makes a profit or loss. Alright? And this amount for a turnover of 1 crore rupees per day could range anywhere between 2,000 rupees to 2,500 rupees per day. And out of this 2,000 to 2,500 rupees amount, 1,000 to 1,250 rupees turns out to be just security transaction tax. And here's where the catch comes in. So listen to this very, very carefully. Let's say Apurva generates a handsome return on his capital of 50% at the end of the year. So at the end of the year, he has generated 15 lakh rupees, giving him a profit of 5 lakh rupees, right? Well, guess what? Out of these 15 lakh rupees, he has to pay 2,000 rupees per day in all these charges, including brokerage, SEBI charges, NSE charges, GST and security transaction tax. So assuming that he trades for 200 days a year, this amount that he has to pay comes out to be 2,000 into 200, which is 4 lakh rupees. So out of 15 lakh rupees, he has to pay 4 lakh rupees in just these taxes, fees and brokerage, which means he will be left with only 1 lakh rupees in profit. And the sad fact over here is that here, Apurva is an exception who has made a profit of 50%, because of which he is still able to take home 1 lakh rupees in profit. Whereas if you look at what happens to most people, SEBI itself says that more than 90% of the traders in derivatives incur losses. So in spite of losses, he still has to pay these fees, which makes life very, very difficult for traders. And if you look at it from the broker standpoint, I actually found a very funny stat. Here's the revenue of the top 5 brokers in India, and it comes to 15,592.95 crores in FY23. But you know what? With just the security transaction tax alone, the government alone has made 25,085 crore rupees. So if you see, the government is generating more revenue than the 5 biggest brokers combined. So long story short, it's not easy to be a trader with so many taxes. This is the reason why Apuro finds a hack to avoid taxes, and this is where dabba trading comes in. So listen to this very carefully. Instead of getting salary directly in his bank account, Apuro will ask the contractor to pay in cash to avoid income tax, and he will hide his actual income. But he cannot use this cash to buy stocks, right? Because if he buys stocks using this cash, then the income tax department will get to know about his income, and then they will send him a notice with fines. And this is where dabba trading comes in. Instead of using a broker like Zerodha or Upstocks to trade, Apurva will contact a dabba trading agent. And how does this dabba trading happen? In dabba trading, the agent executes the trade outside the official market in such a way no actual order is placed on the exchange at all. So the question over here is, if a stock is not being bought or sold, then from where will the profits actually come from? Well, here's where the buyer bets on the stock price movement. For example, if Apuro bets on a Reliance stock which is priced at 1,000 rupees, then at the end of the day, if the stock price of Reliance rises to 1,500 rupees, Apurva will make a profit of 500 rupees. But if the stock price falls to 900 rupees, he will have to pay the difference to the dabba broker. So if you see, there is no actual transaction happening, no brokerage fees, no SEBI fees, no STT, and most importantly, no taxes. All he has to pay is the minor brokerage fees to the dabba broker. So if you see, it is just plain betting. This is the reason why, to save taxes and the transaction fees, investors like Apurva get into the black market. And this market is said to have transactions worth 70,000 crores. So what did we learn from this story? High taxes or high charges, although they make sense on paper, it only takes a few price hikes here and there to make the market go from white to black. In this case, if the government increases the security transaction taxes on trading, it will make trading more expensive and it will push the investor either into the black market or into other countries where trading is easier. So this way, the government ends up incurring a loss and the entire system along with all the entities end up incurring a loss. In fact, you would be shocked to know that today, the highest marginal rate of taxes is about 40%. And this is the bracket for high net worth individuals who trade in big volumes. So the increase in trading costs and taxes could directly promote dabba trading in the Indian system. So are we saying that we should not have taxes like the income tax and security transaction tax at all? Because even after reducing taxes from 93% to today's highest rate of 40%, even then, people are going to try and evade taxes, right? So has anyone actually proved that reducing taxes can benefit the system? Well, strangely, the answer is yes. And it is coming from one of the most iconic economic policies introduced by one of the greatest presidents of the United States, who went by the name Ronald Reagan.
We cut your tax rates anyway by nearly 25%. And what that helped trigger was falling inflation, falling interest rates, and the strongest economic expansion in 30 years.
This is a story that dates back to 1981 America. During this time, the economy of America was not doing well at all. If you look at this chart, inflation had almost hit a peak of 11.8%. Unemployment had shot up from 6.1% in 1970 to 8.5% in 1981. And the real GDP growth stood at just 3.2% from 1970 to 1980. Whereas from 1960 to 1970, the US economy was growing at 4.5%. And the condition of the US economy was so bad because in 1973 and 1979, because of the Arab-Israeli war, the Arabs got angry at the US and they suddenly hiked the price of oil from $4.08 in 1973 to $12.52 in 1974. That is 3 times increase in the oil price. And then furthermore, it shot up to $21.57 in 1979 and reached $37.1 in 1981. So if you see, the price of oil increased by 9 times in just 8 years.
The oil-producing countries of the Arab world decided to use their oil as a political weapon.
World wars among big powers are quite possible to control dwindling oil supply. resulting in their decision to reduce the flow of oil to America and other nations supporting Israel.
Dealers raised prices to more than 40 cents a gallon.
Today's OPEC increases are expected to drive the price of unleaded up to a national average of 77 cents per gallon.
Gas lines at many stations were a lot longer than normal.
In simple words, in the Indian context, it's like saying the petrol price in India in 2016 was 50 rupees a litre, but today the price of petrol has touched 450 rupees a litre. So do you realize if something like this happens, what will happen? The cost of goods will go up, businesses would incur losses, jobs will be lost, and the economy will suffer, right? This is exactly what happened in the United States. Secondly, people did not have enough money to spend because if you look at this chart, the tax bracket in the US started from 14% and went all the way up to 70%. This is the reason why, to solve this one problem, one fine day, Ronald Reagan made an iconic announcement where he declared that the income tax at the highest slab would be cut down from 70% to just 28%. And along with it, he also reduced corporate tax from 48% to just 34%. So now the question over here is, this is a big jerk for the economy, right? Then how did the government generate revenue if not through taxes? And how did Ronald Reagan think that decreasing taxes will actually improve the economy? Well, this is where a theory called the trickle-down effect comes in. So as usual, let's understand this using an example and listen to this very carefully, okay? Because you're going to see a lot of numbers coming on screen. Let's say there was a company called American Baker which had a profit of $10 million, produced 10 tons of bread and had 2,000 employees with an average income of $50,000. So with the 48% corporate tax rate, earlier it paid $4.8 million in taxes, which left how much money? $5.2 million for investment and growth with the company. Similarly, the employees with an average salary of $50,000, they paid 30% tax, which on an average comes out to be $15,000 in taxes per employee. But after the corporate tax was reduced from 48% to 34%, so this year the company just paid $3.4 million in taxes, which left $6.6 million with the company for investment and growth. So now on the outside it looks like the government is losing out on 4.8 million minus 3.4 million, which is the government losing out on $1.4 million in tax revenue, right? But the catch over here is that even after tax cuts, the company has $6.6 million which it can invest in new machinery, research and development, and to expand its operation to produce 15 tons of bread, right? Similarly, the employees are now paying only $7,500 in taxes instead of $15,000 in taxes. So now these employees now have $7,500 extra with them. And lastly, since the company has extended its capacity to 15 tons, it had to hire 1,000 new employees at an average salary of $50,000 per year. So now the American Baker has 3,000 employees with an average income of $50,000. If this is clear to you, let's move on to the next part. Now, assuming that these employees spend 80% of their income, if you look at how much these employees will spend in the American economy, it is a staggering amount. So let's do the math. There are 1,000 new employees spending $40,000 each in the American economy. So this extra spend comes out to be $40,000 into 1,000, which is $40 million. On top of that, the company also has 2,000 old employees who now have $7,500 extra to spend. So again, if these 2,000 old employees spend 80% of their $7,500, the total spending in the American economy turns out to be 0.8 into 7,500 into 2,000, which is $12 million. If this is very clear to you, let's summarize how this scenario has resulted into an economic output for America. The tax paid pre-tax cut was $4.8 million, which is now $3.4 million after tax cut. The total money left for investment back then was $5.2 million pre-tax cut and $6.6 million post-tax cut. Earlier, 0 new jobs were created, but post-tax, there were 1,000 new jobs created. And because of this, the new employee spending got added in the American economy, which is 1,000 into 40,000 equal to $40 million. Then we also saw an increased spending from the old employees, which came out to be $12 million. So the additional economic impact of this employee spending turns out to be $40 million plus $12 million equal to $52 million. And now what happened to these $52 million? These $52 million have been spent into movies, diapers, milk and several other products and services all across America. And now, even if we assume that the average tax paid on these products was just 15%, the government would still make 15% of $52 million, which is $7.8 million. So do you realize in this scenario, initially it looked like the government lost $1.4 million in taxes, but eventually they not only gained $7.8 million in tax revenue through consumption, but also created 1,000 new jobs and $52 million of economic activity. This is how Ronald Reagan envisioned tax cuts to directly result into new jobs, more spending, and higher economic impact, eventually growing the American economy. So the question is, did the US economy actually grow? Well, the stats say that the US economy experienced a period of sustained growth in the 1980s, wherein the real GDP, after initially falling at minus 1.8% in 1982, grew by an average of 4.41% per year from 1983 to 1989 as compared to 3.03% in the late 1970s. Similarly, the unemployment rate fell from 7.2% in 1980 to 5.3% in 1988. And even the inflation fell from a peak of 13.9% in 1980 to a low of just 1.5% in 1987. This is what happened to the US economy after the reduction in taxes. Now, obviously, there are a lot more parameters at play, and taxes turn out to be just one of these parameters, which is why we cannot certainly say that all of these things happened only because of the taxes. But on the outside, if you think about it, this concept looks fantastic, right? Then the question over here is, if this worked out so well, why didn't the US government go on decreasing taxes? Well, that is because, ladies and gentlemen, along with these three advantages, the Reaganomics might also have brought in three disadvantages to the American economy. Now, what are these disadvantages? Number one, income inequality increased in the US, which means the gap between the rich and the poor widened in the 1980s. Secondly, it is said that because of Reaganomics, the national debt in the US increased from $712 billion in 1980 to $2.41 trillion in 1990. And when we looked into the stats, we realized that this is not just because of the tax cuts, but also because of increased military spending. And lastly, the Reaganomics is also said to have resulted into an increased trade deficit as America imported more than it exported. If you see this graph, the merchandise trade deficit in 1980 America was $25.5 billion. But by 1987, it shot up to $159.5 billion. So even though on paper it looks like a great economic philosophy, there is one big problem because of which everything could become a disaster. So now the question is, we just learned that because of Reaganomics, when corporate taxes go down, those companies will then recruit more people, they will expand their operation, and those people who just got their jobs will then go on to spend more money in the economy, eventually resulting into a positive economic output, right? Then why do people still say that Reaganomics was a disaster, and how did it cause harm to the American economy? Well, let's quickly understand this using the continuation of our old example, because only then you'll be able to understand that how less of a control the governments have over the functioning of these companies, and in spite of having all kinds of tax policy, how is it that things could go wrong? Okay, you see, in the American Baker's case, we saw that this $52 million in economic impact was caused because the company did all the good things. They reinvested their money to increase capacity, they recruited more people, and they also paid these new people well. But you know what? There is also a possibility that when taxes were reduced from $4.8 million to $3.4 million, the founder of American Baker just took this entire $1.4 million home as salary, right? So if this happened, he would not invest any money into expanding their operation, isn't it? Or even if he did not take out any salary, he could have just kept the money in the company itself without investing a penny into machines, right? And now if you see this scenario, in both these cases, there is no added economic activity and the government ends up suffering an income loss with no economic activity even after tax reduction. This is the reason why we cannot suddenly wake up one day and drop our income tax or corporate tax to zero and just expect these companies and individuals to reinvest money, create more jobs, and eventually cause a positive economic output. This is the reason why not just India, but for any country, zero income tax is practically impossible unless you have a lot of oil money. So Reaganomics essentially teaches us that there is a sweet spot between no taxes and very high taxes. And this sweet spot will result into both economic activity as well as high government income. And if you go below this sweet spot and reduce taxes, there won't be enough economic activity for the reduction of taxes. And if you increase the taxes by a large extent, then the black economy will prosper. If this is very, very clear to you, let's come to the most important part of the episode, and that are the most important lessons that we and the government of India both need to learn and apply in today's scenario. Lesson number 1. Increasing taxes will only lead to more black money circulating in the market. So, if we have to eradicate black money, all we need to do is decrease taxes as much as possible without hindering the income of the government, such that the wealth can trickle down and the rich people do not have the incentive to hide their money. Lesson number 2. Decreasing taxes and no trickle-down effect will also be a disaster, because it will make the rich richer and the poor poorer. So as the government decreases taxes, it has to actively work towards bringing in policies that will help the wealth trickle down to the bottom of the pyramid. For example, the finance minister told us in our podcast that in Maharashtra, the government slashed stamp duty from 5% to 2% just after COVID, such that the real estate market could boom. And the impact of this stamp duty reduction was so beautiful that people bought more flats, the builders got cash flow, and eventually these builders paid back their loans, paid their suppliers, and most importantly, they paid their workers. So a 3% discount on stamp duty ended up putting food on the plates of millions in Maharashtra. Lesson number 3. As taxes and import duty increases, smuggling will increase. In 2019, the government increased the customs duty on gold bars from 13% to 15.5% to 18.45% in 2022, and in 2023, the import duty on products made of precious metals was increased from 22% to 25%. So if you look at this chart, in 2022-23, gold smuggling in India touched a 4-year high, and almost 4,000 kgs of smuggled gold was seized in the first months of the fiscal year. So in short, we need to be very careful when we increase import duties on high demand products like gold. So if we have to stop smuggling, all we need to do is slash our import duties to an extent where the government can make money, but without pinching the traders. And last and most importantly, as citizens of India, we need to understand that economics is super complicated, and no matter whether the government increases or decreases taxes, there is absolutely no guarantee that it will benefit the economy. Because even though the taxes are in control of the government, how 1.4 billion people will react to these taxes, that is something that no government, no economist, and no AI has been able to predict in the history of mankind. So if you ever meet an economist who works for the government, pay your respects to them, because they are the ones who are trying to bring order to this madness called taxation and this humongous economy called the Indian economy. That's all from my side for today, guys. I just hope you understood everything and this was not too heavy for you. If you learned something valuable, please make sure to hit the like button in order to make YouTube Baba happy. And for more such insightful business and political case studies, please subscribe to our channel. Thank you so much for watching. I will see you in the next one. Bye-bye.